Time now for the markets with Leighton, and the acreage report was released by the USDA at midday on Friday.
And we also have monthly cattle on feed numbers to go over, plus these stories as well. Better than expected winter wheat yields continue to pressure wheat prices. A North Mississippi lumber mill is scheduled to reopen, and new cold storage numbers are said to be bullish for the beef sector. The wheat sector of row crops has shown its ability to rally even in the middle of harvest this year. However, now prices are being pressured lower by what analyst Mark Gold terms some phenomenal winter wheat yields. He offers this analysis and advice.
The yields could be very, very impressive, particularly east of the Mississippi. Illinois, Ohio, Indiana could have some really big soft yields. Combine that with larger crops, we're looking at a 38% increase in Russia, about a 25% increase in Ukraine. Australia's crop looks to be up around 15 to 20%. So we're going to have plenty of competition. There's going to be a lot of exportable grain out there. So I'm just not sure that we're going to be able to sustain this as we move forward. But if anything, I'd probably want to be long Kansas City and maybe short Chicago in here.
Early in the week, we had what analyst Alan Brugler and others called Turnaround Tuesday in the cotton sector, a rally that interrupted a 6-day losing streak. But as of production time this week, it appears the rally was short-lived as prices have come down. Well ahead of the June 28th acreage report, some analysts had noted that if the new numbers did not remove more acres than the supply-demand report earlier in the month, cotton could likely move to a lower trading range.
If December cotton would close consistently a couple days below 83, I think this thing could get uglier to the downside quick. But anything below 83 would bust out of the range, and it looks ugly technically. I think you get flushed down to 81 area quick. Just cotton's a violent market, a no mercy market, and I think it could get ugly.
Turning now to the forest products market, another shuttered mill in the state is coming back to life. Hankins Lumber Company of Grenada said this week it plans to reopen its facility in Grenada. The mill was closed 15 months ago due to the downturn in the national economy. 120 people will be employed to produce southern yellow pine lumber. The trivia quiz this week is about cotton. Let's take a look at our question. Where was the first American cotton mill located? It was in one of these states: Georgia, Massachusetts, Alabama, or Rhode Island. I'll tell you the answer at the end of the markets. We start the livestock section of the markets by discussing the government's latest cattle on feed report. Extension Ag economist Brian Williams provided some analysis of the June numbers as I talked to him on Monday. Brian, some analysts have turned this report modestly bearish. Let's kind of recap the numbers for everyone.
Well, just to run through the numbers, the cattle on feed, the number of cattle on feed, we were down about 3% from a year ago at 10.7 million head. Moving on to the placements, we're down about 2% from a year ago at 2.05 million head. And on the cattle marketed, we're down about 3% from a year ago at just under 2 million head.
Was any aspect of this report really out of line, so to speak, with the pre-report guesses?
Overall, there was really no big surprises. Placements were a bit higher than what the analysts were expecting, but that was offset by lower than expected marketing, so it kind of equaled out.
Where do you see the fat cattle market headed as we approach July 4th here?
Well, hopefully the July 4th holiday will provide a boost to our boxed beef demand, and hopefully, you know, right now the boxed beef is trading for around $2 a pound, so hopefully that will help to boost our fed cattle prices.
All right, and then as we look at the feeder cattle market now, of course we've seen lower corn prices somewhat. Obviously people keeping an eye on that, but yeah. What kind of trends are you seeing for feeder cattle?
Well, going back to the cattle on feed report, we saw higher than expected placements in that, and a lot of that had to do with higher feed prices early in the year, and those cattle were going on cheaper feed sources, and now we're seeing heavier cattle being placed on feed with the corn prices coming down. So that's kind of the impact that's having.
Well, let's talk just a moment about cold storage report that came out same day as cattle on feed. What were the key numbers there as far as the beef sector?
Well, the big take-home point is that the numbers are down. We're down 6% from last month and 4% from a year ago.
So would you term that cattle on cold storage report rather bullish then for beef?
Yeah, that's definitely bullish. Seeing some of the meat coming out of storage and going into the stores, that's definitely a bullish report.
Pork supplies are growing ahead of the 4th of July holiday. Week-to-date hog slaughter through Wednesday was estimated to be 20,000 head larger than last week and 15,000 head larger than this same week 1 year ago. DTN analyst Aaron Newsom notes that the key to this market is to be able to maintain demand for the product. So far, the rising supply hasn't seemed to faze the hog sector.
Good demand for the hogs right now. This is kind of what we were sitting back waiting to see if it would happen, and it certainly has played out this spring and heading into the summer. So as long as we can maintain that demand, as long as we've got relatively bullish fundamentals, it looks like we're going to be able to continue to support this hog market.
Before our feature story, let's check out the trivia answer for this week. And the correct choice is D. The first American cotton mill was located not in the South, but in the state of Rhode Island. It began operating in 1790.